Hi there, it's David Goldberg, United Trust Bank. As we all know right now, it's a very hot real estate market, and we're starting to see more and more cases of appraisals coming in lower than the agreed upon purchase price. And from a lending standpoint, that's an issue because we can only lend on the lower of the appraised value and the purchase price. So when the appraisal comes in short and the seller isn't willing to drop the price, which frankly right now never happens, that means more money out of pocket for you to make the deal happen. So to put this in specific numbers, I want to go over a deal that we just closed. The buyer was purchasing an $800,000 property with 20% down, $640,000 loan amount. Based on a 30-year fixed rate at 5.25, they were looking at about a $4,500 a month payment, including taxes and insurance. And their out-of-pocket expense, down payment and closing costs and prepaids was roughly $172,000. Well, the appraisal came in low by $30,000. So we now have a price at $800,000 and an appraised value of $770,000. That means they were going to need to contribute an additional $30,000. And they really just didn't want to do that because they had in mind, they had kind of set that money aside already for some furniture and some improvements that they were going to do to the house. And they wanted to try and keep the deal as is, but they did still want to buy it and they didn't want to lose any earnest money. So what we did is we literally kept the loan exactly the same. So using the $770,000 purchase price, now we did a loan for $640,000. We still had the same interest rate. The monthly payment was only $53 higher, and their out-of-pocket expense was identical, $172,000. No increase in their out-of-pocket expense, even though we had a $30,000 appraisal gap. Not a bad deal. They were thrilled. And now they're moving into their new house. So these are conversations you want to have with your lender prior to making an offer to make sure what the strategy is if the appraisal comes in low and how you're going to react to it. A lot of contracts now have appraisal gap addendums in them that specify the maximum that the buyer is willing to pay. That's another great idea to keep that in check so that you don't have, just an unlimited expense, but you still need to know how you're handling the loan if that gap exists. So that's a conversation you want to have up front. Reach out anytime when you're starting to think about buying. I'm here to help get you pre-approved and discuss appraisal gap strategies. Have a great day.